everybody, Nate here. And at the end of 2022, it looked like Bitcoin and other cryptocurrencies were completely down and out for the count. But it seems like Bitcoin is making a huge comeback in 2023. Finishing out 2022 at around $16,000 per one coin, Bitcoin has now almost completely doubled its value, and it's only April. In fact, pretty much every major cryptocurrency has followed the same pattern. This has led many to believe that cryptocurrencies like Bitcoin could end up reaching $1 million worth of value by the end of 2023. So how exactly did Bitcoin go from collapsing in 2022 to now becoming one of the fastest growing assets on the planet? Well, it has a lot to do with banks. Traditional finance and traditional banking is the enemy of Bitcoin. Bitcoin was founded on the belief that cryptocurrency shouldn't be controlled by any central governing body, and it should instead be controlled by the people. Now, just last month, we witnessed the second and third largest bank collapses in the United States when Silicon Valley Bank and Signature Bank had to be taken over by regulators. Now, this sort of stirred up a lot of trouble in the traditional banking system, and it caused many people to lose their faith in banks in general. That lost faith eventually pushed up the price of Bitcoin, as a lot of non-traditional investors looked at traditional finance and realized that there was some systemic problems there, and now the collapse could be affecting just about everything in the United States. They wanted to get out, so instead of putting their money in traditional assets, they chose Bitcoin as their non-traditional staple. And the reason for this is because Bitcoin hosts a lot of advantages compared to our regular US dollars, because for one, our regular US dollars are highly inflationary. The Federal Reserve and the Treasury Department can print pretty much an unlimited amount of US dollars, which means the more they print, the more your money is losing its value, which means you need a whole lot more of it in order to go out and spend. On the flip side, there is a cap to how many Bitcoins can exist. It's around 21 million. So there can only be so many Bitcoins out there. Many other cryptocurrencies function on the same way. So they are naturally deflationary because there can only be so many of them. And as long as people think they are valuable, then in theory, they would continue to grow in value over time. But here is the other sticking point that I have been seeing a lot of people figure out about banks recently. So Silicon Valley Bank had an issue with its depositors. So because the bank was investing in a lot of things that are now losing value because the Federal Reserve is raising interest rates, well, it had a liquidity problem, and people wanted to get their money out of the bank pretty much en masse, but the bank didn't have the funds in order to pay back all of its depositors, leaving potentially hundreds of billions of dollars on the line. It was connected to a lot of startups and cryptocurrency companies, and same with Signature Bank. So they had their ties pretty much everywhere, but the issue was in our fractional reserve banking system. And basically this states that banks only have to keep a fraction of their depositors' reserves within the bank at all times. At the height of the great financial crash in 2008, banks and their regulations were heightened. So certain banks actually had to keep around $150 billion worth of depositors' money on hand at all times. And obviously that varied depending on the size of the bank, but they had to have a particular percentage. That number has since been lowered to around 50 billion. So you have a lot of your major banks that are only keeping a small portion of their hundreds of billions of dollars that they're receiving on hand. So if everybody goes to the bank and asks for their money all at the same time, well, they're not going to get it. But this is a big issue for corporations, and it's a big issue for Americans too, especially Americans that have a retirement savings, because you can't just keep all of that money under your mattress. You have to have some type of institution to not only keep it organized, but to keep it protected. The reality is the bank can do whatever they want with your money when you give it to them. So if you deposit $100 into the bank then takes this money and loans it out to people who are trying to get an auto loan or a personal loan or a mortgage. They also take this money and invest it, because the money just sitting there at the bank is subject to inflation, and it's a liability. It's a safety hazard. They just don't want to keep billions of dollars sitting in vaults. That helps the bank to make money so that they can loan more money out so they can open more branches and so on and so forth. But a lot of Americans have an issue with how banks spend their money. And that's sort of where the central body comes in. So now Americans have the central body of the Federal Reserve who prints the money, but then when they get the money, well, people are realizing that they don't have as much control as they would like. And even when they put their money in the bank, they still have a lot of issues depending on which bank they decide to do business with. However, with Bitcoin, the situation is a little bit different. Because the currency is completely digital, you can have it on a hard drive that you can carry around anywhere, and you can lock it with your own specific key. And again, because you're not depositing it anywhere, well, you have complete control over that particular Bitcoin. So if you leave your Bitcoins on an exchange, and you can actually exchange your Bitcoin and other cryptocurrencies with other investors. That would be similar to something called a hot wallet, where basically you have an online wallet where you can do exchanges and the payments and exchanges are going to be live, versus a cold wallet where you can take everything completely offline and store your Bitcoin on a hard drive. Again, that just gives you complete control, and I think a lot of Americans are looking for that type of control with their money right now, as we've seen hundreds of billions of dollars flow out of American bank accounts over fear of collapsing banks. Now, the other big issue that Americans and the United States is facing right now that is pulling people into the cryptocurrency market is this issue with the dollar's collapse. Nations like China, Brazil, and Russia are getting together right now to try to form a new reserve currency, and if it's successful and eventually dethrones the dollar as the world's reserve currency, well, then that could mean the value of US dollars go way down. So anybody holding them is gonna be on the losing end. Now, that could be a serious issue, especially for people who have millions of dollars in their retirement savings, or have millions, if not billions of dollars in assets, and it could potentially be an issue for corporations and other businesses. Not to mention, you have the Federal Reserve right now who is trying to fight this inflation battle by raising its interest rates. Now, when it raises its interest rates, that makes it a lot harder for people to borrow US dollars, because the strength of the dollar goes up. It's a lot more expensive to take on debt because the interest rate for that debt is very high. So your monthly payments are also going to be very high. That is a way for them to lower demand, so that way it sucks out dollars from the system, and with nobody spending any money, inflation in theory should go down. This was one of the reasons why in 2022 we saw Bitcoin plummet in value, because now you had a bunch of investors basically run away from your more risky assets because it was harder for people to take on money, and Bitcoin is a lot more volatile in price. So investors didn't want to bet a ton of money that was expensive to take on just to lose it all by investing in Bitcoin or other cryptocurrencies. Now, even though the Federal Reserve is raising their interest rates and inflation is for the most part coming down, we still have this big inflation problem in the United States, with inflation still over 6%. And what that means is that dollar values are going down, and people who are working are not making enough to make ends meet, because the buying power of all of their dollars is decreasing every single day, which again turns people to a non-inflationary asset like Bitcoin. But at the end of the day, what it comes down to is instability. Nobody knows what's coming next for the US dollar or the Federal Reserve or our economy. And with that instability comes fear, and a lot of investors turn to the unknown like Bitcoin in order to hedge against potential economic collapses. They want to turn to something that is going to have universal value, which Bitcoin in theory would have, just like other commodities like gold and silver. There's an exchange rate for dollars, and if you want to use dollars in other countries, well, you first have to exchange them first, but not Bitcoin. If a retailer or any other business accepts Bitcoins, well, you can use that Bitcoin anywhere you want to. With things being kind of unstable in the financial world right now, and the federal government potentially defaulting on its debt and trying to raise the debt ceiling, well, that means they are finding new and unique ways to pay all of this debt off. One of the ways that they're doing that is the Federal Reserve is trying to create a digital dollar. They want a central bank-backed cryptocurrency, and this is something that they are exploring right now. And what that means for Bitcoin is really up in the air. Now, to be completely fair here, most of the dollars that Americans spend are completely digital. Like in the start of 2020, we had around $3 trillion in circulation, and today we have over 20 trillion, but that doesn't necessarily mean that there's $20 trillion in circulation. That means there's $20 trillion out there that can be spent, and most of that is going to be digitally. So it's sitting in a bank account, and it's basically just numbers. I mean, in theory, that money isn't really real. But just because it's not physically tangible doesn't mean that it's not going to cause inflation, and this is the big worry with the central bank digital currency right now. If the central bank was to create some type of digital currency, well, well, that means it could be even easier for people to access money, which means there could be even more digital money printing and even more dollars out there. And that could mean this inflation problem pretty much never goes away. And we have seen how tough it can be on our economy to continue to print away all of your problems. During the 2008 Great Financial Crash, well, interest rates were slashed to 0% and basically kept there for almost a decade, which meant there was a lot of money printing. There was a lot of businesses and consumers spending money. It was a huge spending time in our economy. Then we also had the 2020 pandemic and recession. And again, there was a ton more money pumped into our economy via stimulus checks and low interest rates where everybody was buying a house. Everybody was getting a car. People were spending money like crazy and there was a ton in circulation. That created cheap money, and money could get even cheaper if the central bank decides to create a digital currency and all money eventually becomes digital. Now, there's also an argument though that this central bank currency could completely wipe out other cryptocurrencies and make them useless, like Bitcoin and Ethereum. One of cryptocurrency's biggest pros is also its biggest cons. It's decentralized. It's not controlled by a central governing body, but that also creates a ton of volatility because now we have very little regulations around it and people lose money and there are a ton of scams out there, and you really have to be educated if you are going to be investing and buying crypto. Some, definitely not all, of those issues could be solved with a central bank currency because it could provide regulation, and it also could provide a currency that is backed by something tangible like the United States government and its military. So there really wouldn't be too many reasons to have an asset like cryptocurrency if that was the case. But again, I could definitely see this going either way. Now, I have no idea what's going to happen in the cryptocurrency market. I have no idea what's going to happen with the Federal Reserve. And like I always say, do your own due diligence before you buy or invest in anything, because I am just some random dude on the internet. Don't take my word for it. Do your research and do your own due diligence. Cryptocurrency still has a lot of questions that need to be answered before it becomes a huge force in the business and financial world and the investing space. Realistically, it's still in its infancy. Bitcoin came out around 2009. Meanwhile, the stock market and real estate investing and investing in commodities like gold and silver have been around for hundreds of years. And to be completely fair, crypto exchanges, I'm looking at you, FTX, have their own issues. So what you have to keep in perspective with all of this is when you invest your money, there are going to be problems. That is why you need to be financially educated and you need to know who you're doing business with, both with your investing exchange and your bank. They are not in it to help you or educate you to make the best financial decisions possible. They are there to make money, so you have to take care of yourself and be financially educated. But right now, Bitcoin is an interesting alternative due to all of the turmoil with banks in our economy and the US dollar right now, and it is completely taking the world by storm once again. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.